Hello everyone, I am back with another video, and this one I will be explaining the different types of accounting and the accounting cycle. So before watching this video, check out my previous videos. It will give you a clear understanding of today's topic. So let's begin. So today is what types of accounting. There are two types of accounting. One is the traditional and the second one is the modern. In the traditional accounting, there are three types, that is personal account, real account and the nominal account. So this is very important to solve numerical problems like general entries. So you must have to memorize these golden rules of personal account, real account and the nominal account. So here the personal account means it relates to persons. Okay, like it tracks only the transactions which is related to individual and the organization. Examples like debtors, creditors, bank. So it's called a personal account. The rule of personal account is debit the receiver, credit the giver. This is much more important to solve the problem. Debit the receiver and credit the giver. Real account means it's related to assets and the properties. Means it tracks tangible assets and also intangible assets. Example like cash, machinery, land. This comes under the real account. So the rule of real account is debit what comes in, credit what goes out. This is much more important rules. And the nominal account. Nominal account means it relates to income, expenses, losses and gains. It relates only income, expenses, losses and gains. Like it helps to track temporary account that are related at the end of the accounting period. Examples like salary, cash, salary, sales, rent. Okay, so this comes under a nominal account. Here the rule of nominal account is debit all expenses and loss and the credit all incomes and gains. So types of accounting, there are two types, traditional and the modern. In the traditional there are three types, that is personal, real and the nominal. For personal account, the rule is debit the receiver, credit the giver, and it tracks the transactions which is related to individual and the organization. And the real account rule is debit what comes in, credit what goes out. Means it tracks intangible and the tangible assets, usually in balance sheet. And the nominal account is it's related to income, expenses, losses and gains. The rule of nominal account is debit all expenses and losses, credit all income and gains. So these rules will going to apply in the general entries. So this rule is much important. And the second one is modern classification. It means the new and scientific way of classifying accounts based on the financial position of a business. Instead of using traditional method, that is personal, real and the nominal, the modern method group account classified into 5 main categories. Okay, that is what assets, liabilities, capital, revenue and the expenses. So assets, things the business owns. Assets means the things that the businesses own. Example like cash, furniture, building. Okay, and the liabilities. Second one is liabilities, what the business owes to others. Examples like loan, creditors. And the capital. Capital means owner's investment in the business. Examples like owner monies or good invested. And the revenue, income, means money the business earns. Example, owner's money or goods invested. Revenue, income, means money the business earns. Examples like owner monies or goods invested. And next one is expenses, means money the business spends. Example like rent, salary, electricity bill, etc. So this modern classification method is used in the modern double entry accounting system. Got it? So these are the two types of accounting, that is traditional and the modern. So traditional are the personal account, real account and the nominal account. And the modern account is classified into the 5 types, that is assets, liabilities, capital, revenue and expenses. And the modern method is used in the modern double entry accounting system. And the second one is accounting cycle. Accounting cycle is like, first we have to identify the transactions, then we have to prepare vouchers, then generalize it. After generalizing, we have to post it into ledger, and after posting ledger, we will prepare a trial balance. After preparing trial balance, we move to the final account, that is balance sheet. Okay, so this is the accounting cycle. Got it? Yeah. In today's class, we learn about types of accounting. There are 2 types, traditional and the modern, and we learn the golden rules of the traditional account, which is important for solving a general entries. And the modern classification account is classified into 5 types, that is assets, liabilities, capital, revenue and expenses. And then accounting cycle, where we learn, like, first we have to identify the transactions, after that we have to prepare vouchers, then generalize it. After generalizing, we have to post it into ledger, trial balance and then the final account. This is the accounting cycle. Alright then, this is all for today's class. If you have any doubt or questions, you can always ask in comment, and I will answer for sure. And don't forget to subscribe my YouTube channel for more upcoming videos. Thank you.